Who is the fastest self-made billionaire ever? Do you believe it's Warren Buffett? It took Warren Buffett 55 years to join the Billionaires Club. If you want to know the best way to invest your money, watch this video until the end. The answer to the question, who is the fastest self-made billionaire in history? Jay Walker. He did it in less than a year. He launched Priceline.com. During the dot-com boom, his net worth skyrocketed from zero to billions. But that wasn't sustainable because when the bubble burst, his net worth plummeted. In contrast, Buffett remains at the top of the list and doesn't appear to be going anywhere anytime soon. That is the kind of wealth you want to build. Money is a challenging game to master. It's a brutal, competitive, and ruthless environment. You need to know what you're doing to succeed. Most people have the problem of working extremely hard their entire lives only to end up poor because they don't know how to let their money make even more money. In other words, they need to learn how to invest. Assume you've been saving money and have $1,000 extra in your bank account. That's already an accomplishment, considering nearly 70% of Americans do not even have an extra $1,000. So, instead of wasting money on another useless gadget or a pair of shoes that you'll wear once and then keep in your closet for many years before finally discarding it, assume you're going to put that money to good use. However, how do you invest your first $1,000? Do you put it towards real estate or the stock market? What types of stocks do you invest in? Is $1,000 sufficient to begin investing? We're going to answer all of these questions and many more. So please give this video a thumbs up and let's start learning about investing and how it works. Consider the following example. Assume you worked extremely hard and saved $300,000. You could go to a Ferrari dealership and buy a luxurious car to show everyone how successful you are, or you could buy real estate and rent it out every month to earn at least $2,000 per month. If you no longer want to receive the $2,000 monthly paycheck, you can sell it and recoup your initial investment. In fact, the value of your investment may appreciate, allowing you to sell it for a higher price. And that is how money is made. However, you can't purchase real estate for $1,000. That's insufficient for a down payment. That means you can put $1,000 somewhere else and let it grow. The simplest method is to deposit it into a savings account and earn interest. But why would the bank pay you to keep your money in the bank? Shouldn't they instead charge you? Now you see that the bank will take your money and loan it to someone else at a higher interest rate, and then they'll share a portion of the profit with you. In short, that's how banks work. Now, the only problem with the strategy is that the interest on deposits is so low that it's not worth it. Reagan's best chance of making his point is 8%. Which means if you put $1,000 in a savings account, 12 months from now, you'll get an extra $8, which is extremely low because the Fed targets an inflation rate of 2 to 3%, which means if you're not getting at least 2 or 3%, you're losing money. The real value of your $1,000 will depreciate over time, allowing you to buy fewer goods each year. But why are interest rates on deposits so low this year? Interest rates are generally low this year because the pandemic forced the Fed to lower them to encourage everyone to borrow and spend money. Once we get out of this recession, the Fed will raise interest rates to 1, 2, or even 3%, which means interest rates and savings accounts will rise. The second option is to purchase government bonds. A government bond is a security that the government issues to raise funds to support government spending. Assume the government wishes to construct a school but lacks the necessary funds. So, there are issues, and I owe you a piece of paper stating that whoever owns the security is out this much money plus interest by the US government. Of course, this is an oversimplification, but in short, interest rates have a significant impact on government bonds. Government bond rates are less than 1% this year because interest rates are extremely low. However, when interest rates were high 2 years ago, government bond rates were as high as 3%, which is not bad, given that government bonds are the safest investment you can make. Every investment involves some level of risk. If you're lending money to the United States government, how likely is it that the US government is going to default on its loan to the US government? To go bankrupt, the US economy may have to fail. As a result, US government bonds are regarded as the safest investment in the world. However, if you want to make a higher return, say 10 to 30%, you should consider investing in the stock market. For example, the stock price of Amazon increased by more than 8%. Google's stock price has risen by nearly 30% this year alone. The value of Tesla stock has increased by 721%. Yeah, you heard that correctly, 721%. Well, the question then becomes, why would anyone invest elsewhere when they can double or triple their money in the stock market? It's because of the risk. There's little risk associated with government bonds, for example. To a certain extent, it's risk-free. However, when it comes to individual companies, there is a chance that they will fail. It's possible that they'll report a loss. Almost any negative news can cause the stock price to fall. The company may release a product, and if the public doesn't like it, it may generate negative press, causing the price to fall. As a result, higher returns imply greater risk. Apple is a well-established company with fewer chances of failure than, say, Tesla, but it also has less room for growth. That's why Tesla increased by 721% this year, while Apple increased by only 70%. What you must decide for yourself is how much risk you can tolerate without going insane. If that $1,000 is all you have left, then perhaps there are better options than risking it all, because you could lose most of it if things go wrong. Investing in an index is one way for investors to reduce risk in the stock market. The most well-known is the S&P 500, which tracks the top 500 companies in the United States. An index fund would invest in the top 500 companies in the United States. Some of these businesses will undoubtedly fail, but others will thrive. According to historical data, the average return rate for the S&P 500 since the 1920s has been around 10%. Purchasing a share of these index funds entails purchasing a tiny portion of the top 500 U.S. companies. My three favorite index funds are S&P 500 Index Fund, Triple Q, an index fund by Invesco, and Fidelity Zero Total Market Index Fund. They are all excellent and invest in nearly identical companies. But how do you acquire shares in this index? Where do you even begin? First, you must locate a broker who's authorized to sell these stocks. Previously, you had to pick up the phone and call to ask him to sell us some shares. Remember the story of the Wolf of Wall Street? He'd spend the entire day calling people and attempting to sell them valuable stocks. But thank God it's 2022 and things are much better and easier. Brokerage firms developed apps, such as Robinhood, Webull, and others, that allow you to buy shares from the comfort of your smartphone. All you need to do is download one of these apps and sign up to begin investing right away. In fact, if you open a Webull account through the link below, you'll receive 2 free stocks. Just a warning, it's an affiliate link, and you'll receive your 2 free stocks as a result. Isn't that incredible? That's an excellent place to begin. Check out the link in the description. I kept this video as simple as possible so that anyone who wants to start investing can do so immediately. Often you want to start investing, but have a million questions. So you start Googling this and that and become exhausted after a while. And then you give up and try again a few months later. So I'll try to answer all of your questions in this short video. So if you found this video helpful, please give it a thumbs up. And if you're new here, please subscribe and turn on your notifications. Thank you for watching, and see you next time.